So there are three main ways you can invest in real estate. The first way is you can build a property yourself, or you can buy an existing property and, for example, rent it out. However, this option requires a lot of capital, and for many people that is not possible, especially if you haven't bought your first house yet. The second way is investing in real estate through REITs, which means investing through the stock market. With this option, you don't need a lot of capital. You can start investing with as little as 15 euros. The last method is investing in private real estate companies that build and manage properties and rent them out to, for example, students or businesses. So in this video, I'll go deeper into the last two options, investing in real estate through REITs on the stock market and investing in private real estate companies. Examples that I'll be sharing in this video are for people living in Belgium, but can definitely be applied anywhere in the world. So let's get into it. Hi there, welcome back to the Rich Pocket Podcast. My name is Hawa. On this channel, I share finance tips. If you want to learn more about personal finance, about real estate, investing in the stock market, and different ways of building wealth, kindly follow the channel. So let's say you want to start investing in the real estate, but you don't have huge capital to buy or build a property, then investing in REITs is definitely a great option for you. REITs are real estate investment stocks, means that you are investing in real estate through the stock market. If you don't know what the stock market is, you should check out the video I posted last week on how to start investing in the stock market as a beginner. In Belgium, REITs are real estate companies that have a special tax status. These companies do not pay corporate tax, but are legally required to distribute at least 80% of their profit to the shareholders. So if you buy shares in one of these companies, you are first supporting the company, and the company then use your money to buy property, to build buildings, rent them out, and manage them as well. The rental income they earn is used to pay you dividends. Dividends are paid monthly, quarterly, or yearly. Because they are required to pay out at least 80% of their profit to shareholders, they don't pay corporate tax. You can invest in REITs in Belgium, but you can also invest in REITs in other countries, for example, United States. However, there is a problem with investing in REITs in other countries, for example, United States, because if you invest in US REITs, the United States takes 15% tax, and Belgium also takes 30% dividend tax. So you are taxed twice. In Belgium, dividends are taxed at 30%. Some Belgian REITs are taxed at only 15%. And this happens when at least 80% of their portfolio is invested in healthcare real estate. So if you invest in a company and the company used 80% of their cash to invest in healthcare, you only pay 50% tax instead of 30%. When you invest in REITs, you are not limited to just one type of real estate. You can invest in logistics, real estate, student housing, social housing, shops, shopping malls, residential housing, so like family homes. So you can choose, for example, to invest 500 euro in student housing and maybe 1,000 euro in shopping malls. So how much money can you make with REITs? On average, REITs pay around 4% to 5% per year. The share price itself does not increase a lot. This is not like, investing in Tesla, where the stock price might go from 400 euro today to 500 euro in 1 month. With the REITs, share prices are generally stable. The main returns come from dividends. So when it comes to risk, REITs are considered low risk investments. There is always a strong demand for housing. People always need a place to live. On top of that, REITs are heavily regulated by the government, which greatly reduce the risk of fraud. Therefore, the risk of completely losing your money is very low because housing will always be needed. Also, investing in REITs is really low effort compared to the scenario where you have to buy or build a house yourself and rent it out. Investing in REITs is also something for people who want to invest for a long term. You don't want to buy REITs and then sell them again next month, because every time you buy and sell, you have to pay transaction tax. So if you trade too often, you will lose money on taxes. So this is why REITs are better suitable for long-term investing, where you buy, hold, and collect dividends over many years. One of the biggest advantage of REIT is liquidity. Liquidity means how easily you can sell your investment. With REITs, liquidity is very high because you can sell your shares anytime you want through your broker. When you sell, for example, today, maybe in 2 or 4 days, you have your money in your bank account. Compared to, selling a house. If you want to sell a house, it takes months. So when it comes to inheritance and REITs, let's say you have a large amount of money invested in REITs. When you're not there and your children want to inherit your investment portfolio, they normally have to pay inheritance tax, especially in Flanders, where inheritance taxes can be quite high. So what you can do is open your investment account with the bank. You can ask the bank to split the portfolio into bare ownership and usufruct. So it means that the account is in the name of your children, bare ownership, and you keep the usufruct. This means that you continue to enjoy the income, you continue to receive the dividend, and you can still live from the money. But your children are already the legal owners of the accounts, but they cannot touch the dividends as long as you are alive. So when you pass away, the usufruct automatically end, and the portfolio fully belongs to your children, and everything is already in their names. So in this case, you don't need to transfer the portfolio again, and you reduce or avoid inheritance taxes because the ownership was already structured beforehand. So this is definitely something to consider for people who have a larger investment portfolio. So the next way to invest in real estate is to invest through companies that are not listed on the stock market. These companies, they buy land and build properties and then rent them out. They can rent these properties to, for example, students, private individuals, businesses, for example, offices. So these companies give the opportunities to ordinary people and professionals, investors, to be part of real estate projects. So when you decide to invest in this type of company, you become a shareholder in a specific real estate project. So for example, if the company builds 200 apartments, you can invest in that project and become a shareholder. You become a co-owner of the project, including the building and also the land. So how much do you really need to invest? For this type of investment, there is usually a high minimum investment. In most cases, you need around 50K to 100K. A lot of people invest in this type of project for practical and long-term reasons. For example, parents invest so that their children can later get priority access to student housing. Later on, the parents can, let's say, sell their shares and use that money to help their children finance their first home. So how much can you earn? If the market goes well, the return is usually around 5% per year. So for example, if you invest 100K, you can earn around 5% per year. This return usually comes from two sources, about 2 to 3% from rental income and about 2 to 3% from the increase in property value. The risk in these projects is considered relatively low, especially for things like, student housing, for example. There are often waiting lists for student housing in Belgium. So demand is very strong, and in general, real estate is something people will always need. You know, a place to live, a place to study, a place to work. So if you want to invest in this type of project, you usually pay an entry cost, but the exact amounts depend on the project and also the size of your investment. However, the good thing is that you don't pay registration fee, you don't pay notary fee, you don't pay government purchase taxes. So the only thing you need to do is sign the agreement and also transfer the money, and then after that the company manage everything. This type of investment is suitable for someone who has large capital and want to invest for the long term. The recommended investment horizon is at least 5 years. However, after like 3 years, you can usually sell your investment and get back your money. By that time, the project has also often already increased in value. Thank you so much for listening until the end. If you enjoyed this video, you may also enjoy the one I've linked above on how to invest in the stock market as a beginner. Feel free to leave your thoughts in the comments, and I'll see you in the next one.